Markets are overbought by some measures. The Nasdaq, for example, is more than three standard deviations removed from its monthly moving average. But what exactly does overbought mean? I'm just going to share some research that I did a few years back in grad school, where the question I was asking is what exactly happens when a market is overbought or oversold? And the answer is not so simple. It depends on which market. One of the conclusions you may draw is that different markets have different characters. So here, for example, I have a 3D plot of S&P. Um, the inputs are a composite indicator of momentum indicators, large negative numbers being extreme oversold, large positive, extreme overbought, and then looking at the subsequent returns on the SPY ETF. And then just doing a simple regression to come up with this 3D surface. You can see here, for example, in the S&P that uh, after periods, well, historically, after periods where the market has been severely oversold, over time, you had positive returns. In the short term, slightly different picture. Here you can see that times where you had a massively overbought market, over time, you had positive returns. So it seems that extremes on either side were followed by strong returns, and which is just explaining a small window of history, because the data that went into this research was I was using Yahoo data and only had, I think the oldest of the series here was probably go as far back as 1990. So you're looking at about 25 years of data. Um, Cues, a little bit different. Look at this. Overbought, you have a bit of a bounce in the medium term, but then in the long term, you had flat to slightly negative returns. Whereas the oversold, you find increasingly greater returns as you move further away from the period where you found those oversold extremes. That, of course, may just link to, the Fed put. We know that over that 25-year period, anytime things got a bit dicey, they stepped in and bailed everyone out. Let's look at a couple of other markets just for interest's sake. This is silver. Look at this. Silver shows that in the past, after periods of being extremely overbought, it's had an incredible run. Whereas periods of being oversold, it's actually sold off. What else we got here? BNO, and it's Brent crude oil. So oil prices. Oil prices, oh yeah, look at this. This is an interesting one. You got this inverted quadratic function, right? Meaning that extremes are followed by very poor returns. So when it's been overbought, the market reversed. When it's been oversold, you had follow through on the downside. I think I probably got one or two more. Emerging market bonds. Emerging market bonds. What do we see? Something similar to what we saw with stocks, right? Things get really bad, everyone gets bailed out, which is something probably worth remembering if you ever want to look at emerging market bonds, because this is the time where the carry is greatest. Finally, look at the dollar against euro. So when the euro has been oversold, this is an interesting one. When the euro has been oversold, in the short term, you've had a bit of a bounce. All right. So, yep, a little bit of a bounce in the short term, but that's short-lived. Over time, it gets smoked. So there's follow through on that. So ultimately, one thing I ended up doing with these findings was I just experimented with developing some sort of asset allocation system, right? Because you find the measures that I found to produce those graphs, I could view them individually through time and plot the markets into different quadrants based on that character that those 3D plots revealed. In summary, these sort of inputs can be used in using some sort of custom weighting based on the different asset classes to find out some sort of voting um, for each different asset class, what you would end up doing in terms of buying, selling, etc. Here's a quick example. I think I've shared these in some reports before, where the different quadrants are represented here, as we saw back here, buy the dip, sell the bounce, etc., etc. And I track these through time in conjunction with all the other bits and pieces that we look at, like the trend indicator, uh, the cycles. But of course, I'm not going to show that because that's premium stuff. So yeah, that's just a quick look at what exactly does overbought mean. It is not so simple. Um, I think you have to look at it on a case by case basis. Okay. And that's it for today's video.